Hello traders and happy April 1st. I thought about doing an April Fool's Day video, but I decided against it because I didn't want a lot of people actually buying and selling based on moon phases and lunar cycles. That was going to be the video. If you really want that video, you can comment below. But today's video is going to be on something far more exciting than lunar cycles: spread trading. Let's get into it. Spread trading is when we take two highly correlated assets and we short or sell the overpriced one and we long or buy the underpriced asset. You can do this with really most cryptocurrencies in crypto and then compare them to Bitcoin. This is a super simple spread setup, like stupid simple. All it is you can see in blue is the asset EOS USD on Coinbase. In white is XBT USD BitMEX, which is just Bitcoin perpetual contract. Down here, you can see correlation. When this is red, that means the two assets are diverging. And when it's white, it means that the two assets are converging. So really, this is just going to alert us to when there are opportunities for taking advantage of spread. And this is just going to be the two of them. So let's just go into a few examples. And I'm going to try to get out this video in 6 or 7 minutes to pack as much in as I can. Example one that looked pretty good, actually. And it was alerted to us around here with all this red. What happened? Well, EOS USD spikes here. We can see it goes from about 2.14 to 2.24 in Coinbase. And Bitcoin's really not doing that same amount of movement, as you can see there. And due to this just crazy amount of movement, this would have been a pretty good time to short EOS and long Bitcoin. Had you done that, you could have actually made money when the two rates converge, as you can see they eventually do here. So you could have shorted this and then gone long this. You will take a slight loss on the long from Bitcoin perpetual, but you'll take an even greater profit from EOS. The one thing you do have to be careful with when you're using the strategy is it is quite profitable to take advantage of when this one diverges wildly from Bitcoin itself. However, you have to take into account volatility. If EOS typically has twice as much volatility as Bitcoin, you need to build that into how many contracts are actually getting of both. Because you don't want to have a situation where you're betting on convergence and then one of the assets has high volatility and the other really doesn't. So let's just keep looking at other assets as well. I'm using FTX today. I thought that this was going to be a pretty good example for some rates that we can use to take advantage of. So a random one, let's look at ETC. So to do that, all I'm going to do is go to ETC. Let's use Coinbase this time. And really red is going to show us where there's a heavy negative correlation, meaning a really good opportunity. And white means when they're converging. So I can already see here that there's a lot going on. First of all, ETC just kind of skyrocketed from 4.9 to what was it, 5.05. Bitcoin wasn't really doing much. It was hovering around the 6200s and slight 6300s. But had you noticed this amount of divergence here, shorted ETC, longed XBT USD, or longed any kind of Bitcoin that there is, this could have been pretty profitable to profit on the convergence because eventually these rates do eventually converge, as you can see here. Now, you may be wondering about scale because each time I change this, the scale does change. These are not scaled on the same chart. This is on the left y-axis. This is on the right y-axis. So really the amount of scale you would use would probably be better with correlation. When this is very white for a long period of time, that really means that the rates have converged. When this is red, that means that the rates are diverging. So one example of how exactly this play would actually likely work out is shorting here when ETC spikes and then going long on XBT USD or Bitcoin, like I'd said before. And then after it looks like that the market had crashed on Bitcoin and naturally on ETC as well, it looks like they just about converge for a little bit of time right here. Boom and boom. But then eventually ETC actually does go right back up. And then the next time where we get that heavy amount of convergence, when this reaches actually 1, is around here. And another time is probably around here and here. So if you're wondering, well, how and when do I actually take profit on this convergence after I short here, long here on the divergence, it'd probably be potentially here, potentially around here, because it looks like they basically converge here and the data backs that up as well. And if you want to get better data than 10 look back, you can also do this. It's going to show a lot more red when I do this, but you can use a 5, which is not as high as a period, and you can see when they're converging a little bit quicker. So that is another play you could make. Again, when you do this, I wouldn't really recommend using leverage. I think that this is likely a better strategy to, well, you could use some leverage, but I would say this is a better strategy to use with low leverage because of the amounts that these prices could actually move, or just to use this on lower volatility assets. That could work as well. Another one that I'm actually really curious about is BNB. Oops, BNB, let's see, BNB, perpetual futures, FTX, sure. I did say it's probably better not to use, high leverage, but let's just look at BNB correlation to Bitcoin. They're pretty highly correlated. Okay, voice crack there. They're pretty highly correlated here. You can see that BNB does spike right here. This could have been an opportunity for us to take advantage of the spread between BNB and XBT USD or Bitcoin. And it looks like we do have some heavy divergence here where the correlation was what, negative 0.75. What was going on here? Something was happening here. Oh, I see what was happening. What happened, again, was BNB spiked up to here from about 12.28 up to about 12.42. Bitcoin did nothing, and because of that, we got negative correlation. And this could have been a time to have shorted BNB, gone long on XBT USD. Now, had you done this in a pretty short-term manner, this one would have actually been pretty cool, because if you long here and then you exit here, your long is a few dollars lost, or I don't know, a few basis points lost. Really nothing's happening, maybe a bit of a profit. But that BNB is absolutely in profit. You can see if you shorted at 12.4 and it goes to 12.34, 12.35, that is profit. That's a profit of what, like 0.5%, and Bitcoin's doing nothing. So you could have made money on this very, very short-term example of a few minutes, but by taking advantage of the convergence between these two assets. Again, this is one of the more risky strategies, I would have to say, with types of arbitrage, statistical arbitrage, and spread trading. This is risky. So do be aware that if you try this kind of trading, that you are taking on higher risk than using other strategies. And let's look at one final coin. I said 6 or 7 minutes, but I think I kind of broke that one. Let's look at Link to finish this off. What are you doing here, Link? So Link has a lot of negative correlation to Bitcoin. If you see just way too much negative correlation, that could be something you don't even want to use, like ever, because you want to have an asset that's typically highly correlated and then take advantage of when it diverges or has a negative correlation. Where did this get very, very negative? It got very, very negative here. Something was happening here. Let's go zoom in on what exactly was happening. They look like they're really moving the same way until this happens, where we get that red. Bitcoin begins falling in white, but Link begins rising. That is just textbook divergence that a statistical arbitrage trader or any kind of statistical trader would want to take advantage of. Link goes up, what percent? Link goes up about 0.7% on Coinbase, and Bitcoin goes down about 0.4%, buying here on the loss of 0.4%, selling here on the gain of 0.7%. We could have made money by waiting until they converge. As you can see, they converge here when we have a correlation of about 0.9 to 1 with full convergence here, and that would have been a spread profit. All right, guys, that's going to do it for this video. Be very careful when using this strategy because these spreads can widen and then continue to widen. So you do have to have very, very careful risk management and have a plan for if this goes not too well for how you can get out of it. Good news is typically these rates do converge more often than not, even with a coin such as Link, when it's making gains and Bitcoin's really not making gains. Before, you can see before anything on Bitcoin happened here, Link was making gains in blue. Had we shorted anywhere in here and longed anywhere in here, your long is basically break even on Bitcoin, but your short is probably profitable on Link because you can see Link goes right back to basis and a good correlation here. And then you get a full 100% correlation right there. So basically what you're doing in a way is you're buying negative correlation and selling positive correlation in a way, even though that might not be the best terms for me to use. With that, stay safe in many ways more than not. This is another tool you can add to your tool belt. Just because you don't trade like this doesn't mean that you can't use it. Let's say you only want to trade Link. It's still important to look at the BTC correlation to Link and to see, hey, is there divergence here? Is there convergence here? To know when to exit or when to even add more. With that, happy trading.